Yo, it's your boy Juicy Banks, and welcome back to another video. On this video today, we're gonna be doing a Sunday breakdown. So, for you guys who are new to my channel, Sunday breakdowns are basically where I go over the market conditions, kind of set the tone and the foundation for this week, as far as for my expectations on what I expect the markets to do. I wanna kind of keep this live, in effect at all times, so yes. Now, with no delay, let's jump right into it. So, as you guys actually know, I'm actually going to be working on and breaking down GJ. GJ is like the pair I trade. It's my sweat, blood, and tears. You know what I'm saying? It's what I've been trading for the past 10 years that I've been trading. Kind of capped there. Really 5 for real, but you know what I'm saying? 10 sounds better, you know? But anyways, I've been trading GJ for quite some time, and that's what we're going to break down. So join me in the land of the charts. Let's jump right into it. All right, so here we have GJ. Now, first and foremost, when I do these Sunday breakdowns, I like to start off from the highest time frame possible. That's the monthly time frame. Now, give and take, I already kind of know where we are within structure, right? We can see here that we have a high, then we have a low, and then price kind of pulled back up here, and then we kind of came back down here. So I know right off the back that we have some supply and demand zones, which I'm looking for next, that I'm going to use as support and resistance in certain areas. Now, this one only matters because we had resistance here, support here, and we came kind of close, but there is actually one right here that I want to kind of draw, right? And that's going to be this one right here because it's going to be our most recent resistance area, and that's here. Keep in mind, right, that we draw supply and demand based on body to wick, right? Body to wick. Body to wick is so important when we draw these things, just for the simple fact we want to be able to kind of see the range based off of wick rejections, more so instead of candle rejections, right? So let's jump back into it. So I kind of have these two relevant zones here, kind of bring this one a little bit down more, and then boom, right? Cool. So now, boom, we have our relative zones. Now, boom, switch time frames. Now, the reason why I started from here is because whenever I back test over the previous market conditions, this always ends up being a market structure area. If you guys don't know about market structure, boy, you got to figure it out. You know what I'm saying? So we're adding a clips here, we'll bag it up, and then I believe this was one as well. We're gonna kind of test it right here. Now, what you're gonna see me do in red, right? These zones that you see me draw in red, these are gonna kind of be the areas that price needs to break to make a new higher high. So until we kind of break these areas in red, we won't get a new higher high. So I could see that we came down, we retested, and so on and so forth. So now I'm gonna kind of alleviate some of the data and delete the higher time frame market structure. And now I'm just gonna kind of focus on drawing what I see. I can see that price came down, price came back up. And the reason why I go ahead and draw this is because you want that simplicity on your eyes as far as for trading what you see and not what you think. So personally, if you see it, you're gonna react off of it, and it's gonna kind of be beneficial for you. Now we can see right around down here, right? Well, I'm gonna add this red eclipse, and I'm doing red because it looks like a market structure. It perceives to be a market structure area. I'm just not 100% sure on what it is quite yet. So we're gonna kind of figure that out. So now keep in mind, right? In an uptrend is maintained by its higher lows. So as long as you have higher lows kind of maintaining the overall uptrend, you should be good. Keep in mind that right around here where I actually drew this eclipse at, we're still maintaining the overall higher lows within this area, but the goal is to pass back here and make past higher highs. So from here, we're gonna kind of draw a range of our fib and kind of see what's going on. So we have 23.6. So if you guys don't know about 23.6, it means either consolidation or continuation. So we have a smooth, boom. So right, this is what it would be via a weekly time frame from this standpoint to here, and so on and so forth. So this is how we look now as far as for structure goes. As the weekly time frame, what we're gonna do is we're gonna go ahead and I'm really trying to open up an image so I can drop it in the chat for you guys. So you guys have this as analysis. Open a new tab, I guess, right? There we go. Boom, screenshot. Wasn't really sure. That's how it sounded like that. It's been some time since I've like used that feature, to be honest with you. Sometimes I kind of just pinch it and draw it. But the whole point of it is I want you guys to be able to have this as analysis so when you guys go back. But let's jump back into it. All right, so we kind of see where we are as far as what GJ goes now on this time frame. We have our structure drawn, we have everything drawn. Now, we don't have too much technicals. I kind of like to keep it simplistic, But what you're going to see is as we go down to the lower time frames and we have more data, this data is what's going to kind of set us free. So now, yet again, we have the data. We know that once we kind of break this down, we'll be good. So let's see. So still 23, still 23, still 23, still 23. So now the reason being why I'm on a daily time frame and I'm kind of paying really close attention to this, because the daily time frame is going to be the lowest time frame that we're going to kind of base our overall structure from. So we're actually going to be leaving the overall trend on here, but we're going to also be redrawing it from right here as well. So that way we kind of just know where we stand. Knowing where we stand overall is definitely going to be good for us as far as your structure goes. Just in case this week decides to throw us any curveballs, we could refer to the daily time frame sense of structure to kind of use it as support and resistance. And you'll be able to see that because 9 times out of 10, like if GJ was supposed to do something, it's not going to break, that higher time frame construct in a sense. Now from here, we can cut out some of the fat. We saw that we came here and that we did some type of transition right around here. Came back up, bing, bing, boom. And then from there, cool. So we'll draw up until here because we have to figure out like what's going on right here. Obviously, we have some type of support going on. We got something going on here that we need to figure it out. So in this event, what we're gonna do now is we're gonna go ahead and delete our higher time frame fib. We know where we are, and we're gonna go down lower. Now there is some supply and demand zones that we could draw, but we could always reverse back. Now let's look at the 12-hour. Does the 12-hour have any significant data that we need? So I could see here from this high, we did do a pullback here. So let's just measure this real quickly from this wick right here to this wick. All right, so we didn't get any 38.2. Let's go down to the 11-hour. So boom. Now, from your 12-hour and below, this is going to be your analyzing time frames. All these time frames are what you're looking to analyze where you are overall within the data. So keep in mind, this is your analyzing time frame. So if you do anything on this time frame or data, just make sure that you kind of mark it off in a significance and just put, like I like to do this. I like to put 11H. So that way I kind of know, boom, right? And then I know that this is like an 11-hour structure point, and I just don't get it confused, right? Because the thing is this, you could backtrack to the daily and you're like, oh, damn, how is this possible? Well, you're really doing your analysis based off the 11-hour, but referring to the daily time frame. So just keep that in mind. These are all things you want to do because when you're using time frame correlation to kind of understand where you are and where you're going, it's going to be very important. You can see that right around here based on this high, the highest point it went to. We got another 38.2 right here. So you guys know what happens when you have a point A and a point B. You can kind of draw it to the future. So from here, boom. And you could have seen that we would have had like our potential third touch and point A, point B. So we could already intel that if we delete this and we redraw our fib from here to here, we're actually gonna get some type of structure. And again, this is why just kind of knowing where you are is important. And then boom, you can see on this higher time frame now, we kind of pass this area. So any area after this is actually a valid market structure, higher high point via that daily and higher time frame, hence the red zone, which is the proceed with caution area. We gotta make sure we break it. So far so good. The trend is our friend and we're looking nice. So now we can kind of see, I can already intel that from right here to right here, this is probably gonna be like a 38.2 or some sort. I'm not saying that because I've done this a million times already. I'm just saying that because the data looks spicy. Keep in mind, past the red zone, we know where we are. Bing, boom, boom. I could already intel that all these down here were 23.6s. And yes, because I did this multiple times already. You guys are new to this, so cool, right? So again, all of this right here. Now, if you notice, we have some wicks right here. Wicks means that it tested the area, but the bodies of price mean that it never settled there. So me looking at it from here, there's a time frame that's going to be analyzed that we're going to have to use this as a market structure area. So we can see that here. So very first thing I want to kind of stay in track since it's a higher time frame. Any area past this area up here is going to be considered a higher high once we kind of break. So just keep that in mind. And what happens on the left affects the right always. There's probably like another zone that we could draw right here based on just looking from left to right data alone, and it's using it as support and resistance. This one, we don't need to kind of make it in red because it's not one of those zones. So we'll probably make it in like we'll probably make it in black. It just needs to be broken by this error. simple support and resistance. Now we're going to go back to our 10 hour. We were never on the 10 hour before, but we're trying to see if we get a 38.2 touch there. So no, we didn't get a 38.2 touch there. We're going to go to the 8 hour. I believe it was the 7 hour. No, I lied. It is the 8 hour. We can see here. Now look, check this out. This is our previous high, right? So we draw our fib from wick to wick, right? Keep in mind it's at the wiki top up here where we did all this rejection. And keep in mind we started from here. Price made this pull back. We got a market structure retest. We got a 38.2. Buyers engulfed and took over and went up from there. So just because we see this and we analyzing this, right? We already know that right here is a market structure area. We are free to start off. Keep in mind when you're realigning your fib, you have to pass that red bar up there. Anything above that red bar is going to be considered a new higher high. So now this is where it gets lit, right? The market did go to these all-time highs up here. We can kind of delete all this data that we have here, and now we could primarily focus on what we have in front of us here, right? Price came back, pulled back, came down, pulled back, came back, came back. And this is all data that we need to be able to critique because we need to understand why. Our biggest job as day traders, more than anything, is to understand the why. Once we understand the why, we can understand where we're going, why we're going there. And it gives us that confidence, right? Because these markets, they're really rinse, wash, and repeat. So again, looking like something like that, right? Now, keep in mind we do our fib from wick to wick. Boom, 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 boom. Now we can see based on this high, just don't forget that we need to draw a red zone up here to alleviate that once price passes this area, we are going above new higher high points. Keep in mind zones can be stretched from left to right. Reason being why you want to stretch them from left to right, because what affects the left is going to help you get right in the future. Don't forget that. All right, cool. Forgot this one needs to be red too. Boom, right? So now from here, based on where we are within structure, we can see that, boom, we came, 23.6. It did its thing. It consolidated here. Remember, at these fib levels, you're going to get different things. Remember, at 23.6, you're going to get a ranging market. At 38.2, you may get a potential aggressive market. And then from so on and so forth. So if you don't know about fibs like that, stay tuned for my next video. You'll be able to kind of see it in there somewhere. Back to the charts. All right. So we can see here 23.6, 38.2. Shit, I thought we were going to be good based on, us getting this retest right here. Nope, we didn't. We dropped, and then boom, we came back right here. You could even see right around here that we had some type of support, which looks like we made some type of low point right around here before, and it was multiple touches. Even if we drag this bad boy to the future, we could see it. So we'll add this in black as well. I like to go a little bit more zone crazy because I feel like price kind of pinballs from zone to zones at times. So that's relatively good. So that's what I like. So yeah. So we can see price kind of rejected this zone. Right off the back, this looks like this was the last structure point area right here, right? When we made like some type of pullback for a higher low. So I know anything that printed on below this area is kind of like a temporary downtrend. So what we're going to do, because right here is this area, we're just going to kind of draw this like this, right? And I want to say we're going to keep it like this, but because price kind of came up and we could see this visibly, we're going to say that this is a valid point of a sense of direction, right? Now, you'd only know to draw this based on adapting to this data right here, but at one point in time, you would have drew right here and you would have saw that structure would have been maintained regardless, right? So now let's pay attention. This is where it gets interesting. So boom, from fib from here to here, we can see that price settled. If you know anything about how I trade, you know I use institutional levels called QPs, and you can see right around here at the 188 flat is where we found support at, right? QPs are institutional, fundamental, and technical support and resistance. Don't bite your tongue trying to say that. Institutional, fundamental, and technical support and resistance. It's all three in one. So, boom, boom, boom. We're going to drop that zero there. And we can see that the the wicks of price actually tested this area. And then we kind of did a transition of trend, right? All we're doing right now is we're breaking down GJ to kind of see where we are for future structure. Obviously, we got all this data over here to go by too, but we're kind of making sense on where we are using the past technicals so that way you build your confidence. That's the whole point of this, right? So obviously, we see all of this that kind of happened. Long story short, price would have broke back out. If you draw it from this wick down here to where we have this 61.8 at, which is a market structure level as well, you would have been able to bag this area up in eclipse and then wait for it to pass, not this red bar, because this was the previous, right? So because this was the previous, once we kind of set the tone of a new one, we could actually revert it back to black, so that way we don't get confused. And then this is the new one that we need to pass now. So now when we draw our areas, we can delete that, right? Keep in mind, structure can still do its things and maintain, right? Like you can see right here, 23.6. If we drew it to this high that it made right here, okay, we had a 38.2. You can kind of see, keep in mind that this one down here was the original. This one, we still didn't make a higher high yet. So this, all these pullbacks are doing is maintaining structure. That's all it's doing, right? So boom, this is using from a maintenance. You can see from here, 23. And you're gonna see a lot of 23, right? We didn't even make it. Again, almost made it to 38.2. And then boom, now we get a new higher high. So right off the back, we're gonna hit this. We're gonna clone. We're gonna drag this up here. And boom, we're gonna stretch this over from left to right. Boom, 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 because we can't see over here yet. But boom, right? So now this is where it gets interesting, right? From this standpoint right here, we made a new higher high. Look where our price retraced to. Price did a pullback all the way to about 88.6. You dig what I'm saying? These are the steep retraces that GJ does. It went into a huge sell-off. We know that once it broke this area right here, we were completely in the downtrend. Boom, it arranged. And you can see that down here, based on where this previous low point is, check this out, right? I have something that I do called the engulfing trick. I'll show you this in another video, but buyers took over from down here. And you can see roughly right around here where buyers took over, we never ever broke this area. I'll make this line, purple is one of my favorite colors, so I'll make it purple. And you can see right here that where buyers took over, we never broke below this low. This is showing you that we have maintained true buyers momentum, especially in this area, and that this was a test and that this was another test as well of the area, right? So bing bong boom. We have again a market structure area right here. All that matters is this one and this one. This one doesn't really matter because this was just used for the maintenance of structure. Keep in mind, I only know this because I've been using the same strategy for years and years and years now. So practice makes perfect. So now here we are now, right? So we got 23, 23, 23, and then we got 38.2 right here. So keep in mind, right? This was the last VS structure via the time frame of watching. Oh, my camera just died. Oh, yep, camera definitely just died. All good, the show must go on, right? Matter of fact, the show will actually take a small pause. Give me 1 second. All right, back like I never left. Sorry about that. Had to put in my new battery in my camera. Now you see me, now you don't. Ain't that right, bro? He agrees. Anyways, let's get back to it. So, as I was saying before, 38.2 right here. We started from here. Remember, past the red zone. Anything above here is a structured area. Now, right? So we got it from this wick up here, and then we got this big-ass huge zone up here. Now, what we're going to do to add some simplicity to this zone, because it's going to be this fucking huge, right? We'll be back to this area. For right now, let's just focus on the details, right? We're going to bring some of these skinny zones over here from left to right because, again, it's all about the future. And bomb. Let's make sure that we drew this one right. It's all about making sure that these zones are drawn to the same body to wick area because we're using the body to wick area to kind of measure for future occurrences. This is like super important. Now, I don't really see the market dropping back down here, but, you know, just in case. I'm going to show you where we are overall, and you're going to, like, blow your mind. You see these zones. So, again, from left to right. So, we have 38.2 here, right? Obviously, it's a market structure area. So, we're going to delete. We already have this zone up here. Yes, we got to make it red, unfortunately. Big red area. We'll get back to it later. Cool, right? So then, boom, we got 23, 23, 23, and boom. So now we kind of get to where we are now, right? Which you can see price fell back here. Once we did this area right here to where we broke at, this, boom, right? This is our actual market structure area. This area should definitely struggle. It should give us some type of struggle to kind of break this area. we're going to kind of make this area yellow because we need to proceed with caution with this area. Yellow is a caution color. Once we kind of get into this area, we will know. Price actually came back down and break, so now this is where we kind of backtrack to the higher time frame to kind of see overall like where we are. Let's see. Alrighty, so boom. So here we are now, right? So now we're going to backtrack. We can see here that we have a hot spot where multiple zones have overlapped. So now we have our new higher high, and we have this previous market structure level. What we're going to do is we're going to drag this back like this right here to our previous structure before that. And now we have the data, right, based off the daily time frame with the highest area, right? So now we can kind of see and now we can kind of anticipate. Now, based on how I see it, right, buyers took over right here via this time frame, so we shouldn't be coming back down low to these depths, right? But, however, we testing 78.6, right? We're testing 78.6, and now we're seeing it. If we backtrack to the weekly, even the weekly kind of agrees with us with the same analysis as well. So we're on point. We're definitely on point for as far as this week goes. Now, we went up and then we came all the way back down. So what I see is based on this time frame is we have this big behind zone from right here to right here that may be rejecting potentially, right? We have a huge exhaustion candle, so let's just know it right off the back. Let's just make it naked charts for a second. Naked charts. This huge candle right here means that sellers are exhausted. They cannot make this thing go down anymore. They're tired. However, there's still volume that we have to be concerned about, right? Let's go back to the charts. This next candle shows that we engulfed, right? But then keep in mind, right around here, this is where the 38.2 was. If we switch to the daily, you can see this is where we had that 38.2, so you can see that hit. We've already been struggling to break right here. We actually pushed up and broke, and then boom. Now, I'm looking at this variation right here because we have two candles and then it took time to variate, right? However, if I look on the weekly, buyers just went over and took over. So what I'm thinking is we may be rejecting based off of this zone that I most recently drew. Let's delete that structure because none of it matters. And let's paint the picture of now of a current structure because, again, backtracking to the higher time frame, this is what I see. I see this. See, we came down here. So we came like this, and now we're like right around here. So we may be bouncing off this area to probably potentially do something like that based on what I see. We have to go down to go back up. So let's go down to the lower time frames. Let's see what we see based off of structure goes. Because structure is actually playing along nice. So now we're on the 5-hour time frame. You can see right around here we had a break of structure. So now let's see something, right? I'm able to identify this area as a break of structure because of this, right? We were simply in a downtrend, right? Let me just delete the higher time frame data because it's not even needed. Oops, sorry. There we go. Boom, we came down, boom, came back, boom, came down, came up, boom, came down, came up, boom, boom. Been doing this for a while, right? We dropped and then we came, then boom, right? Then this candle broke. Instantly, as soon as you saw this right here, buyers are in control. Boom, this is the high, this is the low, this is the high. We broke the structure, so we're good. So instantly, via this 5-hour, we can kind of see where we are within the structure, and boom, let's make sure I drew that right. Let's bring this back down a little bit, right around here, and boom. So we got 50%. That's a market structure area. Now, where am I going to go with this, right? We're going to maintain and maintain and maintain and maintain because, let me see. Because I believe from here, the next area was right around here based on how it looks. Because, yep. Wait, let me see. From this wick, oh, we actually got a 38.2 right here. Let me see. From this wick right here, oh no, we actually got a 38.2 right here. Wow. So let me see. We got our point A and our point B. Let's see how this trend line would have looked if it would have. It would have been really steep, and it would have been fugly. Yep. No. So remember, your trend lines can't be too steep. Let's always keep that in mind. All right, cool. All right, nothing. So then we come all the way up here. Yep. So now, even if I kept it up here to where this yellow zone is and we still have to break, I still would have had a structure point and we still would have ended up breaking back structure, coming back to this zone. So it makes no sense to use this time frame as an analyzing time frame because the structure doesn't even make sense. So now we got to realign ourselves and figure out what time frame, or should I say, what time frame are we going to use to correlate? Keep in mind, I'll make this one red so y'all not are confused. That is the one that got broken. Then from here, we started maintaining going up. So back right here, 50%. Okay, so we didn't test anything there. Okay, so this is looking a little promising. So it may be the 8 hour and higher that we're looking at from this perspective. So we still got to use the higher time frame to be able to weed through and see if this is going to be our area for setup. So let's go to the 10 hour. 10 hour, yep. Let me see. No, the 10 hour, we got a 38.2 right here. 11 hour? 11 hour. Wow, okay. So yeah, we're basing this off of the 11 hour. We can see that especially buyers right here took over. Oh, wow. Fuck yeah. Look at this confluence. Oh, yeah. Okay. And then we got this area right here as well. Yep. Retest trick. All right, so I'm seeing it for this week. It's pretty clear now. I don't need this. I just need to see this. Little zone crazy, but I could see it. All right, so here's what I'm seeing. Let's go down to the 2 hour. All right, we're getting rejections based off of this zone. This is the high and the low. We do have a lower time frame structure down here as far as for zone goes. That should act as an area of support. Let me see. No, it was this one. This one right here being used as support and resistance throughout this whole fucking area. Yep, in the area of our engulfing trick. Where's that wick at? Here we go right here. Probably gonna have to make this white so I could see it so it stands out. There we go. So now we got some fucking confluence. Let's go. Bars took over here. Bing, 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 bing. From this low to this high. Now we're pulling back. Previous area of structure. Let's add some QPs into the line. So now we can see where we're buying at. Okay, so we do have a 750 QP right around there where we're exhausting at. Pretty sure next is the 500, which is right around here. And then we'll add our 250. All right. We're going to wait upon market to open, right, for these levels to be confirmed. Obviously, the lowest that we went was towards the 250. We may even potentially go lower, right? But the lowest that we went was the 500. So based on the data looks, if we look here, we haven't had any strong buyers presence because of the momentum shift that came back down. However, we are at a structurized point for a retest. So what I recommend is this. We be patient upon market open. We could already see buyers are in control via down here. And what do we get, right? Oops. Wrong candle. We can see buyers are in control. We are right around here. Buyers took over. What happened? We retest, we shot up. We came back for a magical retest. We pushed up, and now we came back to the same area to confirm. So we're already building momentum. So we could say that if we pass the 187 area, that we would, oh shit, wrong thing. Sorry guys, I'm fucking up. There we go. We could say that, hey, if we pass this 187 area right around here, we will be good for longs for sure. Like this is like for sure, because we would be taking out the highs and then we just have to worry about this area and then this area going up, but we would be maintaining around this 70.50 area, right? If we go down lower, yeah, we could see that down here, yep, the 750 was the area to buy at, and that this is simply a retest. So what I'm seeing is if price can, where's that long tool at? Fuck it. If price can break above here, we'll set it like with a stop loss of like somewhere like around here and write it up for longs. If we break below the 500, we'll write it down as shorts and see how low we go. Now, I do see more of the stronger of the buy bias. So I'm going to wait for this 187 QP to be broken, and I think we should be good money from there. Once that QP is broken, we should be good to go to get activated and to be in these markets. You feel me? So that was my Sunday breakdown. However, it all depends because we had like a lot of news last week as far as for, NFP and everything like that. So the market wasn't really moving in its best respecting trend. You can see the downtrend is respected heavily. So we still do have to break structure towards the upside. And me looking at it, right, like the downtrend, this was the previous lower low, this was the lower high, this is the lower low. So really the uptrend really isn't valid until we get all the way back up here and we break this. But we can dream and go from zone to zone potentially, right? Looking at it, right? Because we're at a lower low now. You can buy at a lower low because you got to go up and make a lower high, right? And based on these areas, we could see that, hey, this is the previous lower low before this one. So we have to break past here. So we'll probably add like a little red line here so that we can proceed with caution. This may be a potential take profit area if we do get into buys. So that way we know this is a short-term target. This is why I normally go for 60 pips. This is our long-term target. Cool. Now, if you guys did enjoy this breakdown, my bad, 1 second. Now, if you guys did enjoy this breakdown, feel free to join my free Telegram where I'll be keeping you guys updated with trades and also calling some free signals for you guys so that way you guys can eat based on my perspective. I think I'm going to be doing another account build this week. I think I'm going to start my account up with 10K again, and we're going to try to see where this goes. So trade with your boy. Let's see how it goes. With that being said, the past doesn't make the future. Let's just see how this whole thing goes. Cheer me on in this account build. Let's see how it goes. And with that being said, I'll see you guys on the next one. And thank you and deuces.